Welcome to Short View Trading. It's your morning market hit for Monday, 14th of August. It's around 10:30 a.m. London time, mid-morning. And we want to dig into what should you look at if you want to trade equity markets on a 1 to 2 week basis. If you think about trading S&P equity futures, you're a swing trader, you take that 1 to 2 week time frame, what's the best way to go about trading these markets and thinking about them? That's what we're going to dig into in this video. Well, what a fascinating market it's been over the last few weeks. Since I last spoke to you at the back end of July, the behavior of the tech stocks has changed dramatically. At that time, we were talking about the possibility that tech was topping out. As we look at it now, though, key trend lines are being broken, key levels are being broken, and it looks as though sector rotation is truly underway in the US stock market. So let's take a look at some of those key mega cap tech names and the trends that have been in operation. Let's start with Apple, the darling, and of course the largest market cap stock and very much a leadership stock over the course of this year. As you can see in the chart in front of you now, Apple has broken its key trend line. Very strong uptrend line over recent months, dramatically broken indeed just after its earnings announcement, 3rd of August after hours. The stock gaps down and then moves through its 50-day moving average as well. So the trend of recent months in Apple is clearly being broken. And indeed, that's probably one of the most dramatic examples amongst the mega cap tech stocks. But there's plenty of other examples. Take a look at Nvidia, the chart we're putting up in front of you now. Candlestick chart of Nvidia showing the days open, high, close and low for each single trading session. And you can see over the course of August, it's down 12.5%. It's 15% off its highs in July and clearly breaking trends as well below its 50-day moving average. And on top of that, Tesla, Microsoft, similar sort of story, both down pretty meaningfully, double-digit teens percentages from their highs back in July. And of course, both of those key leadership stocks over the course of this year. So the landscape's really changing out there. If you look at the US stock market, if you take the S&P 500, as we often do, and split it into the three key areas, break that index down into long duration growth stocks, which is mostly IT and mega cap tech, number one. Secondly, defensives, think of consumer staples, healthcare, etc. And then thirdly, the cyclical areas of the market, the industrials, the financials, commodities, energy, and so on. And you look at the market from the angle of those three areas, those three segments, you can see that most of the heavy lifting, as we're showing in this chart now, most of the heavy lifting bringing the market lower has been the tech long duration growth area. Defensives and cyclicals sold off 1% or 2% at the start of the month in August, but have been flat since then. So if we're rotating, the question is, what are we rotating into? We're rotating out of tech, but what is the market rotating into? Because if it's into defensive sectors, then normally defensive sector leadership only happens when the stock market's in a major downtrend. And equally, if it's into cyclicals, may well be, although one would have to wonder about that given the pressures on the global economy. But if it's into cyclicals, then every major sector rotation over the past 10, 15, 20 years has been accompanied by at least a pullback in these stock markets, which we're starting to see at the moment. But interestingly, if you're trading markets on a 1 to 2 week time frame, you need to ask yourself what happens next. The S&P is sitting on its 50-day moving average, a key support level, having sold off to that level over the last 2 weeks. Point number one. Point number two, the Philly Sox is down sharply in August, but is also sitting on a key support level, as you can see in the chart in front of you now. And then point number three, if you look in the tech area of the market, the long duration growth area, the NASDAQ 100, it's now oversold on a medium-term time frame. So what do you do with this market? How do you go about taking a view on a 1 to 2 week basis? That's what we dig into each and every day in our daily rag, also known as the Rag Trader. And if you'd like to have a trial to that, see our daily updates of our recommended positioning on S&P or NASDAQ futures, or occasionally DAX futures, and the models that go behind that and the market discussion that goes with that. Please click on the link below and sign up for a free trial for a bunch of trading sessions. All we need is your name and email address, no credit card details required. So what are we watching this week? Well, three key themes. Keeping a close eye on China, where the property bubble continues to burst and deflation is starting to emerge in that economy. There's a lot of data out of China on Tuesday to give us more sense of that. And there's also a Chinese policy announcement on their 1-year lending rates. So they'll be watched closely, theme number one. Theme number 2 is various bits and pieces of macro data across the West. In the US, we've got leading economic indicators, which are always important, as well as fully fed and retail sales and one or two other bits and pieces. Elsewhere, we've got consumer price inflation in the UK and Japan, of course, and of course, inflation's a big focus of the markets at the moment. And then the final key theme we're focused on this week is US earnings continuing. We're a long way through, but we've now got to the focus on the consumer with the likes of Walmart, Target, and one or two other consumer stocks reporting this week. So it should be a good update of the state of health of the US consumer over the course of this week. So that's it from us. That's your morning market hit for Monday, 14th of August. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and like and share on social media if you're so inclined. We'd be very grateful. And otherwise, follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Stay safe. Trade well.